There are hundreds of ETFs available to investors today, but if you're looking to build a portfolio that generates a growing stream of passive income, one question keeps coming up. Which dividend ETF is actually the best? Now, that's not as simple as picking the ETF with the highest yield. After all, a great dividend ETF should do more than just pay you an income today. It should also help grow your wealth over the long term through capital appreciation, dividend growth, and sensible diversification. So in this video, I'm putting 8 of the most popular dividend ETFs available to UK investors head to head in an effort to crown the ultimate winner. To do that, I created a scoring system, and each ETF will be assessed across 7 key categories, including total returns, dividend yield, dividend growth, diversification, fees, fund size, and dividend consistency. By the end of this video, we'll have a definitive leaderboard, and one ETF will be crowned the best dividend ETF. And what surprised me the most is that the ETF I expected to win didn't necessarily come out on top. Before diving into the data, I wanted to find out which dividend ETF the Effortless Investor community would choose. So I put all 8 ETFs into a YouTube poll and asked a simple question. If you could only invest in one of these dividend ETFs, which would it be? Now, if you're not familiar with all of the ticker symbols, don't worry, I'll be covering each ETF in much more detail later in the video when we get to the data section. Let's start from the bottom and work our way up. In 8th place was EEI, receiving a measly 0.5% of the vote. 7th place went to FGQD with 1%. Narrowly in 6th place was TDGB with 1.5%. 5th place was GGRP with 2%. Closely behind in 4th place was GBDV with 2.3%. Taking the bronze medal in 3rd place was IUKD with 11.7% of the vote. That leaves just 2 ETFs remaining, accounting for a combined 81% of the total votes. In 2nd place was VHYL, receiving an impressive 35% of the vote and proving just how popular Vanguard's high-yield offering has become with income investors. But the clear winner of the community vote was LDGG, which secured a huge 46% of all votes cast. That's a remarkable result, and it suggests many investors already see LDGG as one of the most compelling dividend ETFs available today. But community opinion is only one part of the story. Next, I asked ChatGPT the same exact question to see whether AI would come to the same conclusion. If it could only choose one dividend ETF from our shortlist for a long-term investment, which would it pick? Interestingly, ChatGPT's answer was different from the Effortless Investor community. Whilst the community overwhelmingly favored LDGG, ChatGPT selected VHYL as its top choice. According to ChatGPT, VHYL offered the strongest balance of global diversification, low costs, broad market exposure, and long-term dividend sustainability, making it the best all-round option from the ETFs on our shortlist. ChatGPT also highlighted FGQD and GGRP as strong alternatives, particularly for investors looking for higher quality businesses and stronger dividend growth potential. Its full ranking looked like this. In 1st place was VHYL, 2nd place went to FGQD, 3rd place was GGRP, followed by LDGG, TDGB, GBDV, IUKD, and finally EEI. So we now have 2 very different opinions. The Effortless Investor community believes LDGG deserves the crown. ChatGPT thinks VHYL is the clear winner. But both of those rankings are based on opinion. So now it's time to remove the opinions altogether and let the data decide. Let's put all 8 ETFs through the Effortless Investor ETF scorecard and find out which one comes out on top. To make this comparison as fair and objective as possible, I've created the Effortless Investor ETF scorecard. Each ETF starts on 0 points and can score a maximum of 100 points across 7 different categories. The most important category is total return, worth 25 points, because a great dividend ETF shouldn't just provide income today, it should also help grow your wealth over the long term. Dividend yield is worth 20 points and rewards ETFs that generate a meaningful level of passive income. Dividend growth potential is also worth 20 points and assesses whether the ETF's underlying strategy is designed to support growing dividends in the future. Diversification is worth 10 points and takes into account factors such as the number of holdings, geographical exposure, and concentration risk. Fees are worth another 10 points, with lower cost ETFs receiving higher scores. Fund size is also worth 10 points, rewarding larger and more established funds. And finally, income reliability is worth 5 points and looks at the consistency of the ETF's distributions over time. Every ETF has been assessed using the same scoring bands and methodology, ensuring a fair comparison across the entire field. With the rules established, let's meet our first contender. And our first contender is the Vanguard FTSE All-World High Dividend Yield ETF, better known by its ticker symbol VHYL. This ETF is designed to track high dividend-paying companies from across both developed and emerging markets, giving investors exposure to more than 2,000 stocks from around the world. With over $12 billion in assets under management, VHYL is also one of the largest and most established dividend ETFs available to UK investors. Looking at the scorecard, VHYL performs strongly across almost every category. For total return, VHYL receives 23 out of 25 points thanks to its impressive 5-year annualized return of 15.49%. Its current yield of 2.52% earns it 10 out of 20 points. For dividend growth potential, VHYL scores 12 out of 20, whilst the fund focuses on high-yielding companies rather than dividend growth specifically. Its broad global diversification still provides some long-term growth potential. And speaking of diversification, this is where VHYL really shines. With thousands of holdings spread across multiple countries and sectors, VHYL receives the maximum 10 out of 10 points. Its ongoing charge of 0.29% earns it 8 out of 10 points. Its huge asset base earns a full 10 out of 10 points for fund size. And finally, its stable distribution history earns 5 out of 5 points for income reliability. That gives VHYL a total score of 78 out of 100. A very strong opening score and one that immediately sets a high benchmark for the rest of the field. As things stand, VHYL sits at the top of our leaderboard with 78 points. Our second contender is the iShares UK Dividend ETF, better known by its ticker symbol IUKD. Unlike VHYL, which invests across the globe, IUKD focuses exclusively on UK-listed companies with strong dividend characteristics. The fund currently holds just over 50 stocks, making it one of the most concentrated ETFs in our comparison. That concentration can increase risk, but it also allows the fund to target some of the highest yielding companies in the UK market. And that approach has certainly delivered results. IUKD achieves a 5-year annualized return of 17.35%, earning the maximum 25 out of 25 points for total return. Its current yield of 4.65% is one of the highest in this entire comparison and earns an impressive 18 out of 20 points. For dividend growth potential, IUKD receives 10 out of 20 points. Whilst the fund focuses heavily on generating income, it isn't specifically designed around dividend growth. The biggest weakness for IUKD is diversification. With only around 50 holdings and exposure to a single country, the fund scores just 3 out of 10 points in this category. Its ongoing charge of 0.4% earns it 6 out of 10 points for fees. With assets under management of more than £1 billion, IUKD receives 7 out of 10 points for fund size. And thanks to its relatively stable distribution history, it earns 4 out of 5 points for income reliability. That gives IUKD a total score of 73 out of 100. That's a very respectable score, but it isn't quite enough to knock VHYL off the top spot. Next up, we have a fund that takes a very different approach to dividend investing by focusing on dividend aristocrats and quality companies from around the world. Our third contender is the SPDR S&P Global Dividend Aristocrats ETF, trading under the ticker symbol GBDV. Unlike the previous ETFs we've looked at, GBDV focuses on companies with a proven track record of paying dividends. More specifically, the fund invests in dividend aristocrats whilst also applying quality screens designed to identify financially healthy businesses. On paper, that sounds like an excellent combination, but how does it perform when put through the scorecard? Starting with total return, GBDV receives 17 out of 25 points based on its 5-year annualized return of 9.22%. Its current yield of 3.74% earns it 14 out of 20 points, placing it comfortably in the middle of the pack. And one area where GBDV performs much better is dividend growth potential. Thanks to its dividend aristocrat methodology and additional quality screening, it scores 14 out of 20 points in this category. For diversification, GBDV receives 5 out of 10 points. Whilst it offers global exposure, the portfolio is far more concentrated than broad market ETFs such as VHYL. Its ongoing charge of 0.45% earns 5 out of 10 points for fees, while assets under management of around $1.6 billion, GBDV receives 7 out of 10 points for fund size, and its distribution history earns 4 out of 5 points for income reliability. Adding everything together gives GBDV a final score of 66 out of 100. That's certainly not a bad score, but it does mean GBDV becomes the first ETF in our comparison to fall below the 70-point mark. Next up, we have one of the more interesting ETFs in the entire comparison. EEI takes a very different approach to generating income and could prove to be one of the dark horses in this competition. EEI, which is the WisdomTree Europe High Dividend ETF, focuses on selecting high-yielding dividend stocks. Starting with total return, EEI delivers an impressive 5-year annualized return of 16.95%, earning the maximum 25 out of 25 points. Its current yield of 4.52% also performs strongly, scoring 418 out of 20 points. For dividend growth potential, EEI receives 10 out of 20 points. Whilst the strategy is focused on income generation, dividend growth is not a primary objective of the fund. In terms of diversification, EEI scores 6 out of 10 points. With 187 holdings, it offers broader diversification than funds such as IUKD, although it still falls short of the truly global giants in this comparison. Its fee structure earns 5 out of 10 points. One area where EEI loses ground is fund size. With assets under management of approximately £147 million, it receives 4 out of 10 points in this category. However, its distribution history has been relatively dependable, earning 5 out of 5 points for income reliability. Adding everything together gives EEI a score of 73 out of 100. That means EEI draws level with IUKD and moves straight into a share of second place on our leaderboard. Next up, we have one of the most highly regarded quality-focused dividend ETFs on the market, Fidelity's FGQD. This fund takes a very different approach to dividend investing compared to many of the ETFs we've looked at so far. Rather than simply chasing the highest yielding companies, FGQD focuses on identifying high-quality businesses with strong financial characteristics, including healthy cash flows, attractive returns on capital, and sustainable dividend policies. The idea is simple: own better businesses and allow both capital growth and dividends to compound over time. Starting with total return, FGQD delivers a strong 5-year annualized return of 14.34%, earning 23 out of 25 points. However, where the fund struggles is its current yield. At 1.77%, FGQD receives just 6 out of 20 points in the yield category, making it one of the lowest yielding ETFs in our comparison. On the other hand, its focus on quality companies and sustainable income growth earns it an impressive 18 out of 20 points for dividend growth potential. For diversification, FGQD scores 7 out of 10 points. With hundreds of holdings spread across global markets, investors benefit from a good level of diversification, although not quite to the same extent as some of the larger broad market dividend funds. Its ongoing charge earns 6 out of 10 points for fees, with assets under management exceeding $1 billion. FGQD receives 7 out of 10 points for fund size, and its distribution history earns 4 out of 5 points for income reliability. That gives FGQD a final score of 71 out of 100. That's still a very respectable result, but it leaves FGQD just short of the leading group. Next up, we have an ETF that surprised me more than any other in the comparison. TDGB combines a respectable dividend yield with exceptional long-term performance, making it one of the strongest contenders we've seen so far. This ETF invests in 100 dividend-paying companies from around the world and aims to provide investors with a combination of income and long-term capital growth. Unlike some of the higher-yielding funds in this comparison, TDGB focuses on a balanced approach, seeking companies with strong fundamentals and sustainable dividend payments. And when we look at the scorecard, it's immediately clear that TDGB is a serious contender. Starting with total return, TDGB achieves an outstanding 5-year annualized return of 26.46%, the highest return of any ETF in this comparison. That earns it the maximum 25 out of 25 points. Its current yield of 3.11% earns 12 out of 20 points. Whilst it doesn't compete with some of the highest yielding funds we've seen, it still provides a respectable level of income. For dividend growth potential, TDGB scores 14 out of 20 points, thanks to its focus on established global dividend-paying companies. In terms of diversification, TDGB receives 5 out of 10 points. Whilst the fund provides global exposure, its portfolio is considerably more concentrated than some of the broader ETFs in this comparison. Its ongoing charge of 0.38% earns 6 out of 10 points for fees. One area where TDGB performs particularly well is fund size. With more than 8 billion euros in assets under management, it receives 9 out of 10 points. And finally, its distribution history earns 4 out of 5 points for income reliability. Adding everything together gives TDGB a total score of 75 out of 100. That means TDGB jumps straight into second place and becomes the closest challenger to VHYL we've seen so far. Next up, we have an ETF that takes almost the opposite approach to many of the funds we've looked at so far. Unlike many traditional dividend ETFs that focus on generating the highest possible income today, GGRP is built around a different objective. The fund specifically targets companies with the potential to grow their dividends over time, whilst also applying quality screens designed to identify financially strong businesses. In other words, GGRP is less concerned with maximizing current income and more focused on building a growing income stream for the future. Starting with total return, GGRP achieves a 5-year annualized return of 9.85%, earning 17 out of 25 points. Its current yield of just 1.19% is the lowest in our entire comparison and receives just 6 out of 20 points in the yield category. However, this is where GGRP's strategy starts to shine. As a dedicated dividend growth ETF, it earns the maximum 20 out of 20 points for dividend growth potential, the highest score available in this category. For diversification, GGRP performs well, receiving 8 out of 10 points, thanks to its broad global exposure and well-diversified portfolio. Its fee structure earns 6 out of 10 points for fees. One area where GGRP loses ground, though, is its fund size. With assets under management of approximately £195 million, it receives 4 out of 10 points. And whilst its distributions have remained reasonably dependable, the declining pattern of payments over recent years results in a score of just 3 out of 5 points for income reliability. Adding everything together gives GGRP a final score of 64 out of 100. Whilst that places GGRP at the bottom of our current leaderboard, it's important to remember that this ETF was designed with dividend growth in mind, rather than maximizing current income. As a result, investors who prioritize future income growth may view this fund very differently from those seeking the highest possible yield today. That leaves just one ETF remaining, And interestingly, it's also the ETF that received the highest number of votes from the Effortless Investor community. The question is, can LDGG live up to the hype and challenge for the top spot? If you've been following along since the start of the video, you'll remember that LDGG was the clear winner of the Effortless Investor community poll, receiving an impressive 46% of all votes cast. That's a remarkable level of support and shows just how much attention this ETF has attracted since launching earlier this year. LDGG aims to provide investors with a globally diversified portfolio of dividend-paying companies, whilst also incorporating a dividend growth focus into its methodology. And when we look at the scorecard, it's easy to see why so many investors are excited about this fund. Starting with dividend yield, LDGG's yield of 3.86% earns it 14 out of 20 points. For dividend growth potential, LDGG receives the maximum 20 out of 20 points thanks to its explicit focus on dividend growth. Diversification is another area where the fund performs exceptionally well. With almost 1,000 holdings spread across global markets, LDGG scores 9 out of 10 points. Its ongoing charge of just 0.25% earns an impressive 9 out of 10 points for fees. However, this is where we encounter a problem. Because LDGG only launched recently, it does not yet have the track record required for us to assess two of our categories fairly. Specifically, we don't have enough history to score its 5-year annualized return, and we also don't have enough distribution history to assess income reliability. As a result, under the rules of the Effortless Investor ETF scorecard, LDGG cannot receive an official score. And whilst that may be disappointing for some viewers, I think it's only fair that every ETF is judged under the same methodology. However, out of curiosity, I wanted to see what would happen if we awarded LDGG neutral scores in those two categories. Under that hypothetical scenario, LDGG would receive 19 out of 25 points for total return and 3 out of 5 points for income reliability. That would give LDGG a total score of 70 out of 100. Exactly the same score achieved by VHYL. So whilst LDGG cannot officially be crowned the winner due to its limited track record, its hypothetical score suggests that it already has the characteristics of a very strong dividend ETF. And perhaps most importantly, it gives us a fascinating ETF to revisit in a future update once more performance data becomes available. After assessing 8 different ETFs across 7 different categories, we finally have our answer. Officially, the best dividend ETF in this comparison is VHYL. With a total score of 78 out of 100, Vanguard's FTSE All World High Dividend Yield ETF claimed the top spot by delivering what I believe is the strongest overall balance between performance, diversification, cost, fund size, and income reliability. What's particularly interesting is that VHYL didn't actually win a single category outright. It wasn't the highest yielding ETF, it wasn't the best performing ETF, and it wasn't the cheapest ETF. Instead, it consistently performed well across almost every category, which ultimately allowed it to come out on top. For me, that's exactly what you'd want from a best overall dividend ETF. Of course, there are a few surprises along the way. TDGB delivered the highest 5-year annualized return in the entire comparison and finished in a very impressive second place. Prior to the analysis, I don't think many investors would have expected to challenge so strongly for the title. EEI and IUKD also performed better than many people might have anticipated, demonstrating that higher yielding income focused strategies can still hold their own when assessed across multiple categories. And then there's LDGG, the community favourite. Officially, it couldn't be scored because it simply doesn't have the track record required by our methodology. However, when we applied neutral scores to the categories where sufficient data wasn't available, it achieved a hypothetical score of 78 out of 100, matching VHYL's winning total. Now that doesn't mean LDGG should be considered a joint winner. The rules are the rules, but it does suggest that the ETF has started life extremely strongly and could become a serious contender in future years as more performance and distribution data becomes available. Ultimately, what this exercise demonstrates is that there isn't a single perfect dividend ETF for every investor. If you're looking for the best all-round package, VHYL takes the crown. If you're prioritizing long-term performance, TDGB deserves serious consideration. If your focus is generating a higher level of income today, IUKD and EEI may be worth a closer look. And if you're interested in a newer dividend growth strategy with a lot of investor interest behind it, LDGG is certainly one to keep on your watch list. But now I'd like to hear from you. Do you agree with the results, or do you think a different ETF should have taken the crown? Let me know in the comments below. If you enjoyed this ETF showdown and would like to see more ETF comparisons in the future, make sure to leave a like and subscribe to the channel. If you want to find out what the best monthly paying dividend ETF is, or if you'd like to see how my portfolio is performing, check out the videos on the right of the screen. Thanks very much for watching, and I'll see you in the next one.